Greg here from Master Trader. I want to go over a conversation that I had with traders in our green room today, and we were discussing different perspectives of traders from a swing trading perspective versus an intraday trading perspective. Combining the two can be difficult, and so we had that discussion, and we reviewed how, from an intraday trading point of view, you could be bearish at one point of the day and partially bullish on another point of the day. In other words, I can trade long, I can trade short on the same day. Whereas from a swing trading point of view, I have to trade that trend. Whereas from an intraday trader, the trend can move from down to up depending on the time frame that you're looking at. Now we're looking at a 5-minute chart of the QQQ, the NASDAQ 100. And the morning started out with some strength that eventually evaporated, and it had a sharp move down. Prices stabilized at around lunchtime. They often do. I'll point out here this bottoming tail bar that just peaks below the low of the day and pops right back up again. This is a great bar within the context of a bottoming pattern that takes out the low. It often happens in the indices and then starts a counter trend move. It doesn't mean the counter trend move is going to move to the extent that this did. Now, when it came up here, some of the traders were looking for called credit spreads on the Qs or short setups. And this is where I said that the turn was likely to happen, was right here. Now, what happened was it started to turn and it popped back up. It often happens in the broader markets. Algos come in and move the markets around a bit, but ultimately it came right up to the area of the prior high, which you can see by just looking to the left. Nothing proprietary there, just looking to the left, and it's in an area over here. So when it popped back up there and put the turn, which began to happen here, in question, I said, well, if it trades below the low of this wide range bar, right, this is an emotional bar, shorts get caught here on a short-term basis. It pops up, and then from a longer perspective, this is like ultimately where institutions, if they want to sell, they're going to sell. And things came all the way back down, and at the end of the day, there was some short covering. Now, if we look at this from a daily chart perspective, nothing of significance happened. So on a 5-minute chart, there was that big momentum move up, back up toward the high, and on the daily chart, nothing happened, meaning it just stayed in the bottom part of this big, ugly red bar. And we covered this in another video, and even pre-market, we covered what we call a bull sandwich, meaning you got a red bar here, big down bar, followed by a big green bar that's immediately reversed. In other words, up at the highs over here, where the sellers wanted to take control, they didn't care it was a big green bar. They was up at resistance, and the supply came and knocked it all the way back down, and it was a big ugly bar at the end of last week. So today there was this stabilization day. It's still in the bottom half of this bar. Nothing wrong from a swing trading perspective, where your stop would be up here. Shouldn't get back up above there. Now, we always use the middle of a big red bar as a guideline for the opening close to stay in the bottom part of that bar. And if it does, we just figure everything's okay. What happens intraday, these wiggles up and down, even though it looks pretty dramatic and powerful on a 5-minute chart, in relation to the bigger time frame, in reality, it's meaningless. And even if we look at, let's just go to a 60-minute chart, and we see the down move, right? The move up to resistance and the move down, the consolidation. Now, as this forms, what we're going to be interested to see, since it's now creating this new resistance area, is can it get back above this area tomorrow? And if it can, well, that certainly opens up the door to potentially up to the top of that red bar there. So we'll see if that plays out. And, before I go, let's just take a look at the spiders, because the financials were quite strong today for a change. And so that held up the S&P 500. This is the ETF for the S&P 500. So there was this wiggling around. There was this move up to resistance and this big reversal bar on the 60-minute where it started this down move. And let's just go to the 5-minute to look at today. And we see a very similar, even a more dramatic bottoming tail bar that took out the low and it sprung back up again. It's kind of what I call a gotcha trade, where this was a red bar. It looked like it was going to go lower and it reverses back up. Shorts begin to cover. So it ran its way back up here, made this M type of a top, back down. Shorts cover at the end of the day. Looking at the daily chart, what we see is no big deal. So kind of chopping around there, bottom part of the bar. We'll see what happens tomorrow, whether this can get above today's high tomorrow. Can it retrace back up? Or does it just move down tomorrow and just moving into this void below, which is our expectation unless it can get above this red bar. Hope you found this informative. Subscribe to the channel. Be here each morning where we cover pre-market, broader markets, gappers, open trades, stocks of interest. Any questions, email myself, Greg at Master Trader, or Dan at Master Trader.